Looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some Ask James questions of the day. Our first question is from Jared, and he says, we're about to retire and we're lopsided from a tax perspective. I think we have too much invested in our 401ks. What should we do? Okay, so Jared, I think, you're talking about you and a partner or a spouse. That's what it sounds like. And Jared, if you're just about to retire, then you don't have a lot of time to rebalance these accounts, as we've talked about in previous videos. But it doesn't mean that you can't rebalance them. You still can. You see, a good income specialist can help you by doing a Roth conversion analysis. Can take a look at those 401ks, IRA accounts, those tax-deferred accounts, and help you determine how you can gradually pay tax on those and transfer those into something that's tax-free, like a Roth IRA. And you may say, well, what good does that do? Well, there are taxable income sources that kind of kick in as you proceed through retirement. The first, of course, is Social Security, which for many people, most of that is taxable. Then required minimum distributions, which start at age 73 or maybe 75, depending upon how old you are today. And that forces you to take distributions from 401ks and IRAs and pay tax on them. So before those two things kick in, you have a window to plan. And a good income specialist, a good advisor, can help you determine and maybe say, hey, postpone Social Security to age 70. You'll get a lot more of it anyway if you postpone it. And sometimes as much as 24, 32% more than if you took it at your full retirement age. And that gives you kind of more room to do these Roth conversions, because today you can be in the 12% tax bracket and, with your partner being married, having over $100,000 of income and still be in that 12% bracket. Then you go up a little bit from there and you're only at the 22 or 24%. It's not bad. The problem is, once the required minimum distributions come in and the Social Security comes in, you might find that you're in a much, much higher tax bracket, potentially jumping from 12% all the way, from 24% or higher, right? And God forbid you pass this on to your children, right? They might be in the highest earning years of their lives and might even be in a higher tax bracket, possible 32, 35%. Plus, they'll have to drain those inherited IRAs within 10 years, now under the new rules, which can really accelerate the tax burden. So some careful planning will really help you get diversified from a tax standpoint, even if you feel like you've wasted, or waited too long. I'm here to tell you that you haven't. The key is to work with someone who understands how to coordinate all of your income sources together to keep your assets safe while maximizing what you get to keep after taxes. Now, if your financial advisor is just doing investments and can't do an in-depth tax planning or an in-depth Roth conversion analysis, if they're not looking at the whole picture of how your retirement income will be taxed, then I would maintain that that advisor is only doing part of what they should be doing. You deserve comprehensive planning that protects your hard-earned savings and helps you keep more of your money working for you in retirement. Great question. Thank you, Jared. If you would like to send in your question, you can do so. You can email your question to poollocke@poollocke.com. Moving on to our second question. We have this question from Henry, and he says, I want to get some estate planning paperwork done. How do financial advisors help with this? All right, Henry, great question. And again, a true financial advisor should be able to help. And for example, if you're a certified financial planner, and you don't have to be a certified financial planner to know this, but you have to study about investments, about insurance, about different retirement plans like 401ks, but also about income tax planning and estate tax planning. A good advisor has some knowledge in all of these areas and understands how they all kind of work together to protect your assets and generate the income you need in retirement. And I find that sometimes estate planning attorneys look at things in a microcosm and that, that's when things fall through the cracks, because your financial advisor, if they're really coordinating all these departments, so to speak, they need to know and help guide where these other things are going, right? They need to understand how your estate plan affects your retirement income strategy, how beneficiary designations impact taxation, and how trusts might affect your ability to access funds for income needs. So some financial advisors actually have an estate planning person in-house. Other financials have relationships with estate planning attorneys, whether virtual or in person, like we do, both, where they can help coordinate what it should look like with those attorneys. So again, the primary care doctor has their finger on the pulse, and all the specialists are reporting back to that primary care doctor. Your financial advisor should be that quarterback, making sure everyone's on the same page. Your estate attorney, your CPA, your insurance agent, so that your estate plan actually supports your retirement income goals and keeps you or keeps your assets safe and accessible when you need them. Now, if not, at a bare minimum, that true financial advisor can work with your estate planning attorney by knowing what your goals are and what your wishes are for the disposition of your assets when you're gone, for care and for all those important things. Have you planned for long-term care, home health care, things of that nature, right? For when your financial advisor does a good job and has all that information, they should be part of that meeting with the estate planning attorney to make sure that everything is moving in the right direction and that your estate documents actually align with how your accounts are titled and who your beneficiaries are. So financial advisors can help in many, many ways, from making sure your wills and trusts are properly funded, to coordinating beneficiary designations on your retirement accounts, to helping you understand how estate taxes might impact what you leave behind. Those are just a few of the ways a comprehensive advisor protects both your retirement income and your legacy. Great questions today, important questions. If you would like to send in your question, you can do so. You can email that question to Poole Locke at PooleLocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me